What's going on? I hope everyone's doing well. So today's a good example of patience. And even if you wait for a setup, sometimes it just doesn't really formulate the way you want or happen. Bar one, let's go to the left a little bit. Here, let me do it like this. There we go. Just easier this way. So, bar one, big doji, gap up. And if you notice, we gapped up on the prior day, gapped up, went sideways. We're at new all-time highs. So, when you have a big gap up, like so, the first thought is moving average. We're far above the moving average. Very high probability we're going to get to the moving average. So I'm thinking to myself, okay, I don't want to buy up here. Maybe if you see strong bull bars, but again, you're very far from the moving average. Therefore, I don't necessarily want to sell, but I want us to get close to the moving average. That's what everybody wants. So you're starting to get dojis and a tight, fairly tight tight channel down. You get a low one short. You could buy below it if you understood kind of the logic. It's a bad short. Outside up, is it a good buy? Well, kind of, but not really. The problem you have is you are in some sort of tight channel. You hadn't touched the moving average, and you probably will touch the moving average. So a lot of traders don't want to buy here or here without touching the moving average. If traders did buy, they get out below. Over here, kind of an interesting situation. High close, 81.25. Make sure that's right. 81.25. High of the day, 81.25. So traders got trapped. This day, what you want to be careful about in trading ranges is buying too high. It's so easy to say, oh, 3 consecutive bull bars, I'm going to buy. But look to the left. We're not breaking above anything. We just got back to the open of the day. And even here, you buy, you probably get out below this bar. You sell, probably get out below here. The one thing you notice is tight channel, high, not a great buy, goes up a little bit. And then you're thinking, oh, a lot of bull bars, not really a great low too short. Pretty big bull bars here, almost a micro channel, even though it's not really, but it's fairly tight channel, low probability sell, but it ends up going basically to a new low. Then you say, this isn't really a good buy. It's a fairly tight channel, but it goes up further than you want. And when you start seeing this, the biggest thing to remember is there's no big bull bars. Find a strong breakout with follow through. Is this a breakout? Sure, it's a breakout of this, but it's not a breakout of this. Is this a breakout? Sure, it's a breakout of these two lows, but it's not a breakout of this low. What about here? Here's a breakout to new lows. Well, not really. Couldn't even get below that. Bad follow through. Here's a breakout. Terrible follow through. Every breakout had bad follow through. And when you see trend days, maybe we can do it like so. Look over here. Not fantastic follow through, but it's bear bars. Here's a breakout. Here's a breakout. Lots of bull bars. The pullbacks aren't very deep. Another breakout. Lots of bull bars. Consecutive big bars. And this is kind of similar to today. This is, from here to here is fairly similar, just the range is bigger. So we're selling off, but we're getting big bars. Okay? Then we start to stall, and everyone says, we'll have a second leg down. But if you look to the left, 50% pullback, go sideways for a few bars, and you get this really deep pullback, testing around, kind of close to the open, but really a low of bar one. Second entry short, back to the lows. And this is fairly common in trading range. Traders sell, very disappointed, retesting down, and they look to get out at break even. Same thing over here. Traders will buy, disappointed, so they buy more, look to get out at break even. Same thing with today. Sell, traders will sell, they're disappointed, they sell more higher, they get out at break even. Traders buy, disappointed by the sell-off, And what do? They buy more, try to get out of break even. So a fairly boring day. Just look at a few things real quick. PG&E, it's the electric company in California. Just kind of a fun stock I like to watch. Just with all the everything going on with that company, they could go bankrupt with these wildfires. But even them, huge exhaustion gap, cell climax, cell climax, cell climax, cell climax, test of resistance, top of the cell climax, maybe we'll test top of here. Apple, and then I'm going to end this deal. So here's your daily chart, barely any follow through. It's a bull bar, so that's good for the bulls. But do you really want to see, that little of a follow through bar after this, especially with a climactic move like this? No. Even look at the monthly chart. You really want to see, what are the odds? Here's the low of the month. The low of the month is 49.16. The open of up is 49.54. Do you really think we're going to have like a 40-cent tail? No. I'm going to go ahead and get rid of this channel. Find the last 40-cent tail in this entire rally. So you got to think. No tail below a bar as the market's going up means aggressive buyers. Even right here. The open of the bar is 6.96. The low of the bar is 5.93. So here's a dollar tail. You can't even see the tail over here. It's the best looking part of the rally. It's the strongest part of the rally. I don't buy it. I don't think this is going to be the low of the month. I think we're going to turn down. And if I look back to the daily chart or even the weekly chart, again, climactic. I don't see, this is kind of what I'm thinking about. Are we really going to go up to here before here? I don't think so. We may get close. And, again, I think it's hard to sell and put a stop right at the high. Usually you're better off, if you take from here to here, usually you're better off putting your stop somewhere over here. But we'll see. 5-minute chart, trading range, pretty boring day. Here's the open, sold off to a new low, found buyers, strong enough breakout, disappointing pullback, test the lows. So hope everyone has a good day.